Hello again, everybody. Duane here from DRFX Forex and Trading. New Zealand Canadian dollar. Basically, we have a situation in which the market has now given us a strong indication that we're forming a large range setup on this pair. Here we see that the market initially broke this major trend line that, as you can see here, has basically defined the movement of this pair since 2009. We saw a pair of double tops that led to the breakout that we now see here below this trend line. And following the breakup below this trend line, the market has created a, a period of sideways movement that is now gradually taking the shape to lead towards the formation of this range setup. Now the reason the market appears to be forming this setup has to do with a set of signals and candlestick patterns that appear across the currency market that indicate when the market is going to be starting the formation of these patterns. It is important as traders that we're able to identify these patterns as quickly as possible so that you can adjust your trading strategy accordingly. So essentially, you're going to be moving from a situation in which you're using a trending strategy to one in which you're trading within bounds of support and resistance. So once you're able to identify what those signals are, then you're going to be able to more quickly identify trading opportunities within the bounds of support and resistance as they are being formed. So identifying these patterns are critical in basically anticipating a trading opportunity as the market forms the support and resistance boundary. So as we see here, the market rallied sharply and essentially created this second support point to complete the support point of this expected range setup. So now we have a situation in which we're now back at this resistance point, and basically what needs to happen now is for the market to create another setup and another signal that leads to a breakout below this trend line to indicate that the movement is going to continue to head back towards the support boundary and form the second resistance point to complete the resistance boundary and complete the overall range setup. So taking advantage of this can take place as long as we have the appropriate signals on the daily chart to allow us to take advantage of this expected decline. This is going to come from the section in the trading manual that speaks to the strategy of how to trade within the boundaries of support and resistance when they're being formed using the signals on the daily chart. Now there are several swing trading strategies, and the one that deals with trading within consolidation can be done in one of two ways. One, using the signals on the 4-hour chart or the signals on the daily chart. Now given the size of this consolidation that we're seeing here, or this likely consolidation, this is going to be based on the signals on the daily chart. So our trading strategy is going to be based on the setups and the signals for this, using this strategy, using the guidelines and the rules for this strategy. So we're going to follow the steps that are needed in trading these setups based on the rules established, and then analyzing the chart based on what we're seeing, and ensuring that what we're seeing on the chart basically meets the criteria that are set out in this in this analysis sheet. Once that is done, then the next step would be to execute the trade, and we basically fill out our trade entry form using the relevant price that we would have established using the 4-hour chart as our entry. So we'll be using the daily chart to establish a signal, wait on the signal on the daily chart, and then we enter based on the setups and the signals that we see on the 4-hour chart. And once that is done, and once that conforms to the rules and setups in the trade sheet, then we then fill out the sheet that basically is going to be where we're going to be executing our trade. Entry price, volume, stop loss, limit order, all the relevant information with regards to the trade. And once we've determined whether or not we're going to be entering immediately or using an entry order, We then follow the guidelines here, and then close the platform, and then only check the trade, check to see if the trade is still open at the end of each day, up to the established holding period for this trade. So we're gonna be able to, so once, assuming that we get a strong signal at this area here, the distance to support is gonna be very large, and this is gonna be able to provide us with a wide pip range within which to take advantage of this movement and capture a large number of pips. So we're gonna wait to see what takes place. Based on what we're seeing now and the distance to the trend line, we're likely to see something appear in the next 5 to 7 days before at this area here. So within the next 5 to 7 days, we expect the market to gradually form a setup that leads to a strong signal that breaks this trend line. Once we get a strong signal and the setup on the 4-hour chart is in sync with the methodology and the criteria set out in the trade sheets, then we can take advantage of it and trade it. So let's wait to see what takes place at this area here over the next couple of days and capture some more pips. So until then, happy trading.